Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic evening so far. It was fun to see you guys in the um, sentiment trading webinar that we just had 30 minutes ago. And I'm looking forward to this webinar. And thanks for coming. I know we moved this webinar up. I'm not available tomorrow night, so it was nice to be able to move this up. So I'm glad it worked for your schedules. And then for those of you watching the recording, it didn't work out. I apologize. Um, but I do want to say hello to you guys watching this in the recording and invite you to participate in any way that you can in the comment section down below. Before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So I've got a couple of things I'd like to cover today in the COT report webinar. I guess briefly, we'll just kind of just for those watching this in the recording, I'll spend like 2 or 3 minutes explaining what the COT report is. It'll be pretty brief. But there's a couple of things on Steve's scanner that people have asked me to review. Specifically, I want to go over a couple of things because it's still unclear. Um, it is kind of confusing, like what this on Steve's scanner, what the reversal detector is, and like what the 5 week minus 10 week shift is. Like, let's clear this up. Let's make sure everybody knows what the 5 week shift is and how this all interacts and why we've done certain things, how it interacts with each other. I think that'll be really good. And then lastly, we might dive into the COT scanner that we have over here on the website, just under members, COT scanner. We're going to talk a little bit about this. Obviously, we've been using this specifically to take a lot of our price action trades recently. So we'll dive into this as well. But for those that don't know what the COT report is, it's the CFTC COT report from the it's from the CFTC. They're the Commodities Futures Trading Commission, and they're a financial regulatory authority here in the United States. And one of the things they do is they give us this commitment of traders report, which is known as the COT report, and it tells us what the banks have been buying and selling each week. There's several different COT reports. There's COT reports for agriculture, petroleum, natural gas, electricity, metals, and then you also have COT reports for things like financial futures, which includes things like the euro, the Aussie, the pound. This is actually the most common COT report. It's the CME, Chicago Mercantile Exchange COT report. And I just do a Google search in here and I'll search like the euro. And here's the euro. This is the euro entry as of the last report. And it shows me what non-commercial traders are doing and what commercial traders are doing. And you can see these are their long positions and short positions. For non-commercial, these are the long and short positions by commercials. So why do we use this information and why is this important? So basically, the COT report is important because it helps us get an edge as far as to see what the banks are doing. If they're buying, we want to buy. If they're selling, we want to sell. Okay. These guys are good at trading. Okay. They're very good. They're professionals. They stay in business. Um, they move a lot of money. And so they're better at trading than even I am. They're better than you. They're better than, these guys. They've been doing it a lot longer than all of us combined, right? And they also have way more money than all of us combined. So I like to see what they're up to. Um, and there's so many different ways to use the COT report. It's taken me years to kind of figure out how to use this successfully. And I've just been determined to figure out different ways to use this. And so that's kind of what the scanner is. It's the culmination of all their data put together. So when you're looking at these, you can see there's non-commercial versus commercial. Non-commercial is actually the banks, which may sound kind of weird. You probably would suspect that commercial is actually the banks, which is actually, there is some truth to that. Commercial can be banks, but these guys are not the type of banks you're thinking of, at least the ones I thought of. Commercial is actually hedge funds and institutions that use trading as a way to kind of hedge their positions to operate their business. An example of this would be like a farmer. in the Midwest who owns thousands of acres of farmland, and let's say they want to hedge futures on corn or futures on coffee beans or something like that. That so that they could operate their business appropriately. That's something that they might do if their business is big enough. They would register with the CFTC, and then they would actually hire a trader who would basically offset losses and or profits to maintain profitability. That's an example of a commercial trader. One example. Non-commercial is people who aren't like that. These are big banks, large speculators is what we also call them. They're big banks who trade with the only purpose of trading. They don't sell anything. They don't, you know, buy and sell corn. They don't produce corn or coffee beans or whatever. Like these traders, all they do is they just trade day and night to make money. That's all they do. They don't produce anything. Okay. And that's kind of you and me, right? Like I mean, we all have different purposes for being here. I think, trading offers a lot of things. Like, obviously, I think the number one reason is because it provides an opportunity to create more money in our life, that could supplement an income. The other thing too, it provides a community like here at Trading with Steve. You've got friends here, you've got people you can bounce ideas off of, you've got me. It's kind of nice to be able to have another thing to do, right? In an environment that's not so cutthroat as like Wall Street or something like that, right? So it's kind of nice to that's another reason. So you have that. It's also challenging, like if you're a person that likes to challenge yourself and try new things, trading is definitely one of those arenas as well. So we have those purposes for being here, but we don't really produce anything in that. We do we're just, if you think about it, we're kind of the second and third string in the markets. We're participants when we can, but most of the time, the varsity team is these guys right here. And actually, these are the two teams playing against each other. It's non-commercials versus commercial, that play against each other. Another detail that we haven't talked about in a while, I thought I'd bring it up. Commercial is actually a bigger market than non-commercial. There's more contracts involved with the commercial side. Um, these guys are bigger just because they deal with more currency. And they actually are the guys that provide liquidity for non-commercial, believe it or not, which is kind of crazy if you think about it. But non-commercial is the group of traders, like I said, that speculate in the markets for the purpose of making money. So we like to follow these guys. So when you look at the scanner, most of the data is driven from what these guys are doing. And we look at a couple of things. We look at what's the overall position they have on the euro, what's the overall short position they have, what's the change in positions from last week, which is this information down here. That's always pretty nice to look at. And then we kind of built it in just to we built it into obviously the COT scanner here and Steve scanner, right? Steve scanner is, like I said, the um, Steve scanner is kind of the scanner that we have, right? Obviously, this is the world renowned Steve scanner. And so, um, but I wanted to make sure everybody knows how to use this. So, a couple of things. I think everyone knows that when we take weekly trades, we're filtering by overall signal. So we want to take the top strong buys and strong sells from the overall signal column. But then there's all these other columns, and what do they mean, and what's the relationship to each other? Um, I think it's important to start here with the overall again. So everything we look at is a cumulative score, and that cumulative score determines whether or not we're going to buy as an overall signal or sell as an overall signal. So the scanner will look at what's the 5 week shift, which is these two columns right here. What's the difference in the 5 week and 10 week, which is this reversal detector. That's these two columns. This column is just the long-term footprint. What's the long-term bias by the banks? And then these right here, these three actually, this column and then these two columns with the two green bars, that's sentiment. And then this very last column is the crowded market, which we've been talking a lot about recently. I wanted to really cover, uh, maybe first, let's actually start with the 5 week shift. That'll make more sense. And then I definitely want to cover this right here, the reversal detector. This is very important, and it will help you take a lot of really great trades. This is what we're using as well for a lot of our price action setups throughout the week. So I want to make sure everyone knows how to use this. Okay. Okay, let's start with the 5 week shift. Okay, so what is this 5 week shift column? So these two columns talk to each other right here. You can filter this by signal, and you can see all of the strong buys and strong sells come to the top right here. So what is this? This is just looking simply at um, which currencies or which currency pairs have seen the biggest shift in COT data over 5 weeks. So if I filter this like this, you can see the pound franc has had the biggest shift over the last 5 weeks. So there's been a plus 50.92% shift in the pound franc. So that means the banks have been buying the pound franc very aggressively.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Over the last 5 weeks. Now, we have reason to believe there's some other things we're looking at right now. That's not the only thing we look at, obviously. We're going to talk about that later, but um, that's not the only thing you want to trust, if you're going to buy something. This week, the pound franc would actually be a pretty good buy if you were to buy the pound. I think it's up quite a bit this week, if I recall. Let's take a look at it. Um, yeah, that one's actually gone up pretty well this week. It actually dipped here last night and then it came right back up. I actually think, if you wanted to, there's probably you you I think the short-term signal on the pound franc is a strong buy. To be honest, I think you could probably buy the pound franc if you're a short-term trader, like or over an overnight trader. Buys are the way to go if you're gonna do this. I'm taking a sell right now actually, or I'm not selling. Well, I guess it depends on which account. No, my big time sell is right here. So I'm trying to sell at this supply zone right here. This is my big plan. There's a big supply area up here, and we haven't hit it yet. So I have a pretty good hunch that this is going to keep going up, until we get to this supply zone. So any dip that the pound franc makes right now probably would be a good dip buy. If you get any dips, it may just rally out of here tonight. I have a feeling it will. I think this will just keep going up. tonight. And then when it gets up into the supply area, that's when I'm going to start my big time selling on the pound franc. But you can see what's going on. Like if you actually pull up a higher time frame here or just kind of expand this out, look what they've been doing. This is definitely an uptrend over the last 5 weeks, right? So does that make sense? I mean, yeah. I mean, 50% net shift on the pound franc. Absolutely, the banks have been buying. The next one is silver. Has silver been going up big time over the last 5 weeks? Let's take a look. I'm pretty sure it has. Um, I think gold's gone up more, but I think silver's followed suit. Yeah, sure enough. Here's the longer term time frame, or I guess expanded time frame at least. And yeah, sure enough, that's been all bought up by the big banks on silver. Okay. And pound CAD's been going up. Obviously, that's been a buy. So all of this is the 5 week shift. So this kind of helps you kind of stay in the right direction. The 5 week shift, it's just another edge. I don't know if it's a really good standalone indicator. I think it could be used as a standalone indicator. Um, but what you'll find with standalone indicators is that they lack confirmation. So you'll either be super right or you'll be super wrong. And you can make standalone indicators work. I've noticed throughout just any strategy out there, but you really got to be diligent to cut your losers short. You got to cut those losers off if you're going to use a standalone indicator. So you could just use this alone, and I think that would put you in the right direction most of the time. Um, as far as like a weekly bias goes or something like that, this is going to put you in the right direction. Another way to use this is maybe use the 5 week shift as a bias when you're looking for price action trades. So filter this by the biggest shifts. That's probably not a bad way to go. You could also filter it the other way. You can see the biggest negative shifts. There actually hasn't been a ton of negative shifts. The franc yen's the most negative, and it's only 21.97 over the last 5 weeks. And then when you look at the pound franc, that is more than double the absolute value of the franc yen. So definitely lots of positive shifts right now going on over the last 5 weeks. So that's really all that metric's telling you is, and it's good. It's a good metric. It's very useful. Um, but I wouldn't say I don't think it's your golden nugget. I don't think, as far as like picking the direction every single time, it's not going to work that way. But like with anything, this is an edge, and this will generally put you in the right direction if you were to just follow that. Okay, so let's move on to the next one. The next one is this reversal detector. We'll spend a little bit of time here just because this is really important. I want you guys to get this. I want you to internalize it because this is actually a really cool thing that got added to the scanner, I think 3 or 4 weeks ago. Very, very solid stuff. You guys are going to love this. It's already helped us this week in picking signals. Like when you filter this, a couple of these made it through, like the pound Aussie strong sell made it through. The Euro CAD strong buy made it through. Um, yeah, Euro franc buy made it through. USD CAD buy. So this is very useful. It really can be a great way to pick trades. Okay. So what is this? What is this thing right here? What does this do for you and for me? Um, so I think the best way to look at this would be to go to the COT scanner. I'm going to show you how to view this on the COT scanner as well. Um, so basically, this was kind of born, I kind of discovered this just through observing the markets. Um, the COT data when it's raw, it's actually really hard to use COT data, just pure COT data, unless you know how to read it and make it something printable or something that's like that would give you an edge or tell you what to buy or sell. So how do we do that? Like how do we turn the raw data into something that's useful? Um, sorry guys, I'm getting okay, let me decline that. So how do we make it useful? So um, the best way I know how to make something useful with COT data is to observe trends, to observe past reports versus the reports that we have now. Because the data comes out once a week. The CFTC COT report comes out every Friday at 4 p.m. Eastern, and we get it, we don't get another one until the next Friday. So the last one we had was last Friday. And so that's the most recent one we have. And we've got one every week prior to that. And so I built this COT scanner right here to look at each week. This is the shift in COT data over the last week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, and then here's 10 weeks. The 10 weeks is really far out. That's 2.5 months ago. So this is looking at the net shift over the last, 10 weeks. So you can see here with the pound franc over the last 10 weeks, the pound franc has experienced a 62.74% positive shift over the last 10 weeks. You can see right here on the pound Aussie, it's had a 58.92% positive shift over the last 10 weeks, like I just mentioned. And then pound yen had a really positive shift over 10 weeks and so on. That's really cool. But I stumbled upon this almost by accident. I noticed that if there was a big difference between the 5 week and the 10 weeks, so if you kind of cut it down the middle, if you cut 10 weeks down the middle and you observe the difference between what happened in the last 5 weeks versus the last 10 weeks, if that difference is pretty big, what that details to you and me is that there's been a new trend change. Okay, that means that the banks have more recently bubbled up the markets. They've decided to buy something or sell something more recently. Okay. And why is that important? Because if they were going one direction over 10 weeks, and then over the last 5 weeks, they've subsequently just changed. They're like, you know what? We were buying, but now we're sellers, or we were selling and now we're buyers, right? The change in week to week is really important. So what I do is I take the 5 week and I subtract the 10 week from each other. And if the difference, if that absolute value is really big, then that kind of details to you and me that there is an opportunity here, okay, that we should start looking at. So now with that in mind, if we go back to Steve's scanner, you can kind of filter these to the top. So you can either filter this by biggest shift, like you can see, or the biggest change. So it says 5 week minus 10 week percent shift. It'll just tell you if you hover over it what it is. And so you can see that silver has had the biggest net shift over the last 5 weeks. So silver, like, that might be a good buy generally from that metric. If you, as a standalone, that metric is telling us to buy silver right now. That the change in the last 5 weeks has been very significant. And then if you go and look at the next one, the Euro CAD has had a really big shift or change. And actually, let me actually duplicate this and let's compare this so you guys can see. So this is 31.31%. And then if I actually go to the COT scanner itself and look at the Euro CAD, you can see that difference. Let's just search Euro CAD. Yeah, so right here, 10 weeks over the last 10 weeks, it's had a negative 4.89% shift, but over the last 5 weeks, it's had a plus 26.42% shift, right? So we went from a negative number, not a really big negative number, but over the last 5 weeks, we've come very positive. So what does that tell you and me again? Tells us that something's fundamentally changed, right? Like there's been this push to buy EuroCADs, and we've got the full-fledged support by the big banks, the big players who do know what they're doing, that is indeed what they're buying right now. Very cool metric. Actually, I have another cool idea to make this even more robust. I thought about doing the exact same thing, but comparing like the last 3 weeks, the 3 week shift minus like the 5 week, or maybe 2 weeks minus the 5 week. That might actually give us better shorter term signals. Yeah, that like which will be nice. That'll be nice because I mean everyone likes good trades. Like everyone wants a good swing trade, but more frequent shorter term trades is I think what more people would want. And if we can make the scanner a little bit more accurate in the shorter term field, I think that would make everybody happy. So anyway, I'm just trying to find ways to make this work even better. But for now, this is super awesome. Like this is already great detail because even just this alone tells us, you can see that's a big difference between the two. And so what has the EuroCAD been doing over the last 5 weeks or last couple of weeks at least? Um, and you can see there's been a change, right? Like let's go pull up the week to week indicator. So this is 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks. Now, over the last 5 weeks, there's been a tremendous shift by these banks. Absolutely. So I'm just trying to figure out if I can get detail on this a little bit faster. And I think if I take the 2 weeks minus the 5 weeks, um, basically the same thing I did with the 5 week and 10 week. That might be a little bit of a better shorter term metric. So like I said, we might get that added to the scanner at some point. It'll be pretty cool. Okay, what's the next one? So we got the EuroCAD, AussieCAD. Like this is another good example right now. So this has had a pretty good, like I said, a solid positive shift over the last 5 weeks compared to the previous 5 weeks. So again, if you look at the COT scanner and we pull up the Aussie CAD, you can see right here, this was a negative over the last 10 weeks. The Aussie CAD has experienced a negative 18.07 shift. Over the last 5 weeks, it's been a plus 11.57 shift. So that's actually a big difference between those two numbers. One's pretty negative and then one's decently positive. So what does that tell you? Well, it tells you that the Aussie CAD has experienced a monumental change by the banks over the last 5 weeks. It means that they've gone positive because there's a big difference between these two numbers. And that's good intel. That's really good information because now I can come over here and expect a move to the upside on the Aussie CAD. So let's look at this. So 5 weeks would be, this is 1 week right here between these two yellow lines, 2 weeks, 3 weeks, 4 weeks, 5 weeks. So this is where they started to buy, was right there. And it's generally gone up, but they've actually bought this quite a bit. I think this is actually undervalued right now. This is something that we have been talking about. That's why I have a buy limit order sitting right there at demand is because we have intel on the banks right now. We know they've been moving this Aussie CAD in a big way to the upside. And so I'm just prepared to buy dips on the Aussie CAD right now. If they dip into here, I'm totally down to buy with them. I just need to get a better price. So that's what I'm preparing for there. Okay, so I hope that's a good, here's the euro pound as well. This could be a good one. You can see right now the euro pound. Um, let me answer Danny's question. What's the yellow? The yellow is it's called the weekend Saturday to Sunday indicator. I just searched for it in TradingView. It just tells me this is just this is just separating the weeks. So this is the weekend right here, last Saturday and Sunday. This is Saturday and Sunday the week before. This is Saturday and Sunday the week before that, and the week before that, and so on. And so I like to do this so that I can see what I'm looking at. When did the banks start buying? Which we did, I think we determined they started buying here, and they've been buying since, and it's actually dipped. So that's why we're thinking, the banks are buying, but it's dipping right now. Maybe that's going to have a move up soon, right? It's kind of how we look at that. Okay, the next one I think is the euro pound. So if we go back over here, you can see they've had a positive shift compared to the previous 5 weeks. So let's go look at the euro pound and let's see what's going on here. So this is actually a pretty good one. Yeah. Um, Yeah, let's talk about this one. So this one over the last 10 weeks, and actually if you look at the COT scanner, let's just pull up euro pound, euro pound. Okay, so the euro pound has had a um this is kind of interesting. So it's had a negative shift over the last 10 weeks. It's had a negative shift over the last 5 weeks, but it's far less negative than what it used to be. Like the shift just hasn't been as negative as before. So I know there's some negative numbers here, but it's not pushing as negative as like I said as before. And so when you compare those numbers to this, it's actually positive. Like you have a positive number here because uh we are transition even though these are still negative, because this was so negative and we have less negative numbers here, we are transitioning away from negativity. Even though it's still, I get it, it's still negative, but it is moving away. And when we need to know this, we need to know this before it happens, right? Like that's the only way to use the COT report is unless we can manipulate it and know how to identify those changes before those things even happen, then we're going to just miss out entirely on these moves. So that's why we have to do these types of analysis so that we can identify that even before it happens. So that's what we're seeing right here is a big difference between these two numbers, albeit both negative. One is far less negative than the other. And that's why this is technically a buy signal, a strong buy on the reversal detector. This is indicating that likely the euro pound will probably experience some upward momentum. It's not the only thing to look at. There's definitely other things we want to look at, but this is kind of telling us that maybe there's some positive moves coming here. So if you look at this last 5 weeks, 1, 2, 3, 4, 5, this is where the banks started to really slow down their sells. And then the 5 weeks before this, they were heavy into sells before this, right? You can see 1, 2, 3, 4, 5. They started selling big time back there, and now they're not selling as aggressively. In fact, it actually looks like they're starting to turn positive, right? So that's why this is giving us a reversal detector indicating that there's a potential for the euro pound to maybe start going up soon, right? Very cool. And this is again, you know, I used to take COT report numbers at face value. Like if you look at my videos from several years ago, you'd probably find me just taking trades, but okay, they're buying the euro, so let's buy the euro. But if you don't know how to use that number and kind of like compare it to what it was, what was the footprint 5 weeks ago? What was it 10 weeks ago? And compare it to where it is now. It's really hard to use the COT report unless you can um, get derivatives on that footprint, if that makes sense. And that's what this COT scanner does. That's what Steve's scanner does. And we're just getting better. I feel like we exponentially get better and better with how we're doing this. This is getting really good. Okay, so let's filter this the other way now. So you can see all the negative numbers. So the pound Aussie is a good example. So this is a strong sell signal on the pound Aussie. I know it's up this week. It's just kind of gone up with all the other pound pairs that have been going up. But this is a good example. It's a negative 27.56% shift over the last 5 weeks compared to the previous 5 weeks. So let's go look at the pound Aussie. This is kind of an interesting example. So this is interesting because um, the last 10 weeks, this has been really positive, 58.92. And then over the last 5 weeks, it's losing its steam and how far it's been able to push. Like you can see here, the 4 week and the 3 week are about the same. Um, the 20 weeks actually about the same too. They are adding long positions in the pound Aussie still, just like the euro pound still has shorts, but we can see a slowdown and we're detecting that slowdown happening in real time. And because of that slowdown, we're kind of on high alert that there could be a reversal on the pound Aussie coming soon. It hasn't happened yet, but we're definitely on high alert that this pair is actually this is like starting to look really good. Yeah, I mean this was an apex high here 2 weeks ago. You can see on the pound Aussie. Um, we've got a head and shoulders pattern going on right here. If you count this current high, that's a shoulder. I guess you could call this another shoulder over here. Um, so like I said, we're preparing because this pair is a little bit unstable. This is one of the weakest of the pound pairs right now. I know the pounds have been up this week, but this may be one of the weakest pound pairs that we know of. So when this thing collapses, it'll probably be pretty epic, because it is one of the weaker pairs. So this one definitely put on your watch list. Once this thing breaks through this trend line, this thing is toast, and it'll be pretty epic. But there's a lot of reasons. Oops, I didn't want to do that. There's a lot of reasons to to be looking at this pair right now. And when we go over here with the pound Aussie, let's see. Actually, let's look at the scanner specifically, the Steve scanner. Yes, the shift has been positive, and so that could be the 5 week shift is positive, and so we are thinking that there is a possibility for this to go up. But the fact that the reversal and the slowdown over the last 5 weeks is definitely there. And when you consider the fact that this is in crowded market stage, as you can see, which is a different metric altogether, there's enough here to issue a strong sell. Okay. And so I would not want to buy this right now because you can observe a slowdown and the banks have a huge long position. Uh, their position is so big that they're now crowded. I would say that this pair is probably due for a move down. That's so anyway, that's I'm thinking that this one could actually have some pretty good moves later this week. I think this one's going to happen sooner than the other pound pairs, to be honest, with its demise. When it finally happens, it'll be pretty epic on the pound Aussie. So anyway, there you go. Let's see. The next one on the list is the CAD yen. This is another one that's minus 25.77. So when you look at um, the COT scanner. This will be our last one. And then if you guys have questions, let me know. But yeah, you can compare the difference. So look at this right here. The CAD yen went from a positive number over the last 10 weeks, and then it's gone to a negative number over the last 5 weeks. So there's been a push to sell the CAD yen. Definitely, there's something going on there. And you can see for sure over the last 2 weeks, look at that. The 2 week shift, that's huge. That 2 week shift is one of the biggest 2 week shifts I've ever seen. That's a minus 43% net shift over the last 2 weeks. That's insane. Um, CAD yen, guys. Let's take a look at it. So it's actually up right now. Um, but 2 weeks ago, they added tons of shorts, which most of that was added, I think mostly in like this general area is where they were adding shorts. And if they got out, they made their money. But the thing is, I know they didn't get out though. That's the thing, because last week they shorted even more. So they shorted in basically this whole area too last week. Um, so this is some recent buying pressure. I think a lot of it's just because of the yen right now. I do think the CAD yen will probably I think it will pull back based just on that standalone metric. Um, like it's probably like this is a huge move up, and I think you will get a move down again to revisit some of these demand zones down here. Um, but again, it's not a standalone indicator. I mean, you can use it as a standalone right there, but it's not the only thing. I mean, sentiment's currently a buy signal right now. There is no long-term signal. There is a slight sell signal on the 5-week shift. So this is really the only thing driving that sell narrative is that detector. Um, and I bet it comes. I just don't know if it's going to come right away, right? So it's just something to think about. Anyway, so that's this is a really useful tool. And like I said, not every single one of these are going to work out, but some of them are going to be great. Like this week, the Aussie CAD buy was really good. Euro CAD buy has been really good. The silver buy has been really good. Um, CAD yen not yet. It's coming though. Pound Aussie not quite either. That one's also coming. And Euro pound strong buy. That one I believe is also coming, just hasn't quite happened yet. So some of these signals have kind of already done their thing, but there's at least half of these that really haven't done their thing yet. And those are the ones you really want to get excited about because those are the ones that have the most opportunity still, right? So if I were looking at this like with the Euro pound and I were using this indicator, this reversal detector, I would be looking at this Euro pound and I'd be saying, okay, it's been going down. I think it's due for a move up here. And then I would layer out all the demand zones I could find. If I find demand down here, I would look to maybe make an entry there. If there was demand here, I'd make an entry there. So my job would just be try to find demands and ride that thing up is how I would use that indicator. So, all right, guys. Well, we'll just let our trades do their thing. Um, yeah, we got our weekly trades going. We've got our price action trades going. We had our cool Euro Kiwi trade close out last night at Take Profit. That was really fun. And let's see if we can do that again with some of our other price action trades. All right, guys. Well, I'm going to go ahead and wrap up. Appreciate each one of you. Have a fantastic rest of your evening. Thank you for coming, and we'll see you guys in the next webinar.